Hello everyone, I am Dr.A.NAGALAXMI, Assistant Professor, Department of Commerce with Finance in Dr.SNS College of Arts and Science, Autonomous, Coimbatore. I am going to make an explanation for the problem, the issue of shares. So before going into the problem, we have to see the general introduction, as a brief introduction about shares. First, we should know what is meant by a share. Share may be defined as one of the equal parts into which the capital of a company is divided, entitling the holder of the share to a portion of the profit. So this is what is meant by share. We should know what are the kinds of shares. There are two kinds of shares. One is preference share, another one is equity shares. So preference shares is nothing but which enjoys certain preferential rights. Preference shares have a fixed dividend and it is guaranteed before any payment of dividend is made in respect of equity shares. The second preference enjoyed by the preference share is in respect of the return of capital in the event of winding up of the company. So this is what about the preference share, and there are 5 types of preference shares: cumulative, non-cumulative, participating, redeemable, guaranteed. There are 5 types. We should know what is meant by equity share. Equity share are those which carry no special rights in respect of annual dividends and return of capital after the company goes into liquidation. The rate of dividend on such share is not fixed as of preference shares. Dividend on equity share is paid out of the residual balance left after paying interest on debentures and dividend on preference shares. This is what about equity shares. Now we are supposed to go to the problem. ABC Limited issued 20,000 shares of rupees 10 each, payable as 2 per share on application, 5 including premium of 2 per share on allotment, 3 per share on first and the balance on final call. All the money was received except the first call money on 4,000 shares, which was received later on final call. Make necessary journal entries. So, issue were made. Out of the issue, on the first call 400 shares money was not received, and that money was received at the time of final call. Now we are supposed to prepare the journal entries. So bank account debtor to share application account. This is for the receiving of share application money. Bank account debtor to share application money 40,000. Next is share application account debtor to share capital account, that is transferring of share application money 40,000. Next is share allotment account debtor 1 lakh to share capital account 60,000 to share premium account 40,000. That is here the allotment is made. That is the issue is made on premium. So the allotment, in the allotment that premium amount is received. So 40,000 is the premium amount, 60,000 is the allotment amount. Totally there is that is they have to receive 1 lakh rupees. When the intimation is made, they received the money. So bank account debtor 1 lakh to share allotment account 1 lakh. So here the allotment money was received. Next is the intimation of the first call. Share first call account debtor 60,000 to share capital account 60,000. Intimation is made, but for 400 shares, here the first call money was not received. So bank account they received one by the bank. That is they received bank account debtor 5,58,800. Calls in arrears. So 3 rupees per call. First call money is 3 rupees. So 20,000 they have received for 19,600 shares. 400 shares they have not received. 400 into 3 rupees, 1,200 calls in arrears account. It is a loss. So it has to be debited. Next is to to the share first call they are supposed to receive 60,000 but they received 58,800. 1,200 is calls in arrears. Next they are going to make the final call intimation. Share final call account data to share capital account, 20,000 shares into 20 rupees, 40,000 they are supposed to receive. Here they received 41,200 as they are going to receive 40,000 for the final call and 1,200 for the outstanding of first call money 1,200. So bank account data for 41,200 to share final call account 40,000 and to calls in arrears account 1,200. Thank you. I think you might have understood this problem clearly. Thank you so much for your patience listening.